Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's take a look at some stocks on the move today in Europe. I'm Jack Sitters with Stephen Carroll. We're joined by Bloomberg reporter Chloe Melly. Bayer buoyed this morning by a US court case. Tell us why.
Yeah, it's good day for Bayer today. The US Supreme Court said that it would hear the company's appeal that is related to lawsuits against its Roundup herbicide, which has been accused of causing cancer. And so a favourable ruling from the Supreme Court would essentially undercut thousands of similar cases related to this Roundup weed killer. And this litigation has been a problem for Bayer for years because it inherited it when it bought Monsanto in 2018, and it's already paid more than $10 billion in verdicts and settlements. It's set aside another $6 billion. So a favourable ruling would be very positive for the company. It is worth noting that even if the court does rule in favour of Bayer, it would not necessarily end all litigation. Some plaintiffs could actually shift their strategy towards claims such as faulty marketing instead of failure to warn about cancer risks. But this decision is definitely still a really big milestone. It will significantly reduce the risks for Bayer, and it means that some of the pending 67,000 cases will actually lose, some of them will lose their legal footing and will prefer to go for maybe out-of-court settlements, which are better, more favourable for Bayer.
Yeah, indeed, and shares up by 6.9% at the moment on the back of that. Less positive picture facing BMW this morning. Its shares are currently 4.3% lower. What's happening?
Yeah, BMW, Volkswagen, Porsche, Mercedes, all of those car makers today are down because, of course, of the tariff news that we all got over the weekend. So Trump announcing this 10% levy on 8 countries that are opposed to his plans to acquire Greenland, and then saying that the tariff would increase to 25% in June unless a deal is reached for the US to get Greenland. So as expected, all the sectors that are vulnerable to those tariffs are weaker this morning, and car makers in particular are very exposed to this. They had a really tough time last year when tariffs were first announced, and then things calmed down a little bit for them when a tariff deal was reached between the US and the EU. But now we have this threat from Trump, and then the EU retaliating, potentially imposing tariffs on $100 billion worth of US goods, and then also saying that it would halt the approval of the July trade deal because the European Parliament still needs to ratify that. So old wounds are essentially being reopened there, and this tension and all this uncertainty is not going to be positive for that car industry, which is already dealing with a lot. It's dealing with Chinese competition. Some of those car makers are going through really big, ambitious turnarounds like Stellantis and Porsche, and so this news of tariffs is going to be an additional challenge that they have to deal with.
And Chloe, a similar story at LVMH. Why are they down?
Well, Morgan Stanley analysts are essentially saying don't get too excited about LVMH. They downgraded the company, saying that they are taking a pause for breath because there is a limited rooms for shares to appreciate in the near term, and that is despite the fact that the luxury industry is actually in a much better place now. It has definitely much more catalyst now than it had a year ago, and we had Richemont, for example, last week reporting sales that came in way ahead of estimates. There is Burberry this week that is expected to show that its strategy is really paying off, that sales are accelerating. So there is a lot of enthusiasm in the luxury sector at the moment as we are waiting for all of those companies to report. But Morgan Stanley analysts are saying that there are still risks, at least for that big luxury player, LVMH, with currency fluctuations still being a bit of a drag, tariffs, and then this news of tariffs also potentially being back in the conversation, causing potentially some further challenges there as well. So LVMH, get excited, but not too excited is essentially the headline.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.